Thank you, Annette, for the introduction. Hello, everyone. First of all, thank you for having me. It's a pleasure to be here and representing an asset management view. Everything is obvious once you know the answer. This is the title of a book by Duncan Watts discussing the shortcomings of human forecasting. And I wonder, how will people evaluate our actions today in 10, 20, or 30 years from now on? Obviously, they will have the benefit of hindsight. But even without it, I think there's a lot that we can get right now. Today, I want to talk to you about the future of Europe. So let's jump right into it. We, the financial industry, have a critical job to do when it comes to the well-being of Europe and its people in the coming decades. It is within our reach to shape the allocation of capital. Therefore, we need to work towards a common goal, help facilitate the allocation of money, of capital. Let me use the next 15 to 20 minutes to share with you why we need to transform and why now, what needs to happen, and some practical insights from an asset management perspective. Let us start with the why and why now, and take up what previous speakers have already described. The foundation of Europe's prosperity and security that have been built for the past 70 years are no longer fit for the future. It is clear that Europe will have to make significant investments to finance transformative projects over the next decades. Several long-term dynamics create an urgency to act now. First, geopolitical developments. In the past, Europe has been taking advantage of the US for foreign security, Asia, and in particular China, for manufacturing and production, and Russia for energy supply. In other words, we have outsourced fundamental components necessary for resilient countries, industries, and us as a society. This left us vulnerable. With the COVID breakout, basic necessities of the day-to-day life were partially not available anymore. The brutal war against the Ukraine brought a new dimension to this. While the war has shaken us deeply from a humanitarian point of view, we have also seen challenges regarding our own energy supply. What we see is that we entered a new order of geopolitical relations. Now we need to rethink the way we position ourselves. The reasons are glaring. On a geopolitical level, we see a shift away from globalization at all costs. Players like China show reflexes towards protectionism and inward-looking policymaking, and the US has passed regulations to save local companies. This evokes the need to become more independent and resolve critical dependencies. And here I'm not only talking about energy supply, it's about our complete supply chains. Going forward, we need to ensure that we have access to critical components and core technologies. By this I mean raw materials, semiconductors, lithium batteries, cloud and edge computing, to name only a few. Important to note, to support a sufficient level of independence and security, capital is required. Second, development on a macro level. There are several structural challenges Europe faces that have been an ongoing topic of discussion. I'm referring to issues such as European demographics, climate, biodiversity risks, and European debt levels. We are all familiar with the tremendous impact it would have if we don't enforce actions. We need to address the reduction of our labor force and increased healthcare costs by aging or due to aging societies, just as much as we need to tackle climate risks that fiercely threaten our livelihood. Likewise, the importance of biodiversity and the need to shift to a circular economy require sustainable solutions. And given rising national debt levels, it becomes clear that public funding is limited. This strongly implies a need for private investments. Third, micro level. When comparing European listed companies with their global peers, we notice a few pain points. Real earnings have not been increasing for the last decade, and there is a delta in performance when comparing European and US equity markets. Much of this delta is driven by Europe missing out in growth sectors like tech, healthcare, or consumer discretionary goods. There are structural reasons for this. One main issue is the limited availability of risk capital. Venture capital is estimated to be just 0.1% of Europe's GDP, 0.1%. This shows that there is a limitation to change and innovation. Especially in the current environment, think about the recent events around Silicon Valley Bank, European corporates might struggle accessing capital and transforming themselves. To sum up the dynamics on a geopolitical, macro, and micro level, a large amount of capital needs to be developed to position Europe, to foster growth, and to set the parameters for a sustainable future. Which role does the financial industry need to play, and why we? The investments required to transform Europe are worth trillions of euros. The investment gap is significant. According to an estimation by the EU Commission, close to 600 billion euros per year are required to deliver the green transition and the digital transformation. Out of this, climate mitigation and energy targets alone will require approximately 350 billion per year. And while some of this can be financed by the EU, public spending is not sufficient. Only for decarbonization, it is estimated that a remainder of 215 billion per year needs to come from private markets. And let's not forget about technology. We need to look at technology as the fundamental force to make transformation work. Bottom line, the financial industry needs to step in and complement spending on public level. We need to act as facilitators and ensure that capital is allocated to projects supporting our transformation. And at that, we need to act faster. Just this week, the Intergovernmental Panel on Climate Change stated that climate action requires 3 to 6 times of the current climate investment. Having said that, I have no doubt that globally there is enough capital available to drive Europe's transformation. However, we struggle to mobilize it. Here, a lot boils down to policy making and unfinished projects around the capital markets unit or sustainable finance lead to a fragmented financial sector. To give you an example, the Sustainable Finance Disclosure Regulation, SFDR, provides a framework to better disclosure and encourage a shift in capital towards sustainable activities. As a result, investors can understand much better how sustainable their investments are. Standards like these are of great importance and shift capital into green investments. However, efforts in the context of sustainable finance favor divestment over transformation. In an environment like Europe, with largely mature companies, we risk starving them out of capital, which is urgently needed. To revamp the European economy, we need to deploy capital where change must happen. Or put it differently, we suggest to create room for investments that are transitional in nature. Transitioning companies' footprint to reach net zero into 2040s and moving towards generally more sustainable ways of doing business must be the goal. Naturally, this requires a framework. Here we have the chance to pick up lessons from the past. It is crucial that we develop an approach that provides transparency about investment objectives and ensures progress. A well-designed transition taxonomy would then help to mobilize capital to to finance a transformation process. Aside from this, we need projects that can be invested in the short and the midterm. Especially in Europe, overwhelming bureaucracy is an obstacle. But we are not starting at zero to tackle this. Policymakers have been helping to overcome structural hurdles. Efforts to shorten project planning phases for renewable energy are one example of this. Going forward, we need to continue this path. And at that, pragmatic solutions are required, including the reduction of current bureaucracy and fragmentation. And timing is key. Given long lead times for implementing policies, it is important to move capital markets now where they need to be. Despite these hurdles, there's no doubt that capital can already be mobilized. Consequently, the financial industry should not hide behind regulation or use it as an excuse to stop enforcing actions. So let me come to the role of asset managers for Europe's future. It is my core belief that asset management can and has to play a vital role in the transformation of this continent. From a matchmaking point of view, asset managers have the capabilities to connect the growing demand for private capital with investors. And from a fiduciary point of view, it is our distinct duty to identify attractive investment opportunities and make them available for our clients. When looking at the overall asset market globally, forecasts indicate continuous growth. This confirmed what I mentioned before. There is no shortage of capital. Allow me to give you some numbers. Based on the consensus view, we expect global assets under management to reach about 170 trillion by the end of this decade. This translates into an annual growth rate of about 6% since 2021. When looking at alternatives, for now, the most relevant asset class supporting a potential transformation, annual AUM growth is estimated to be more than 10% between 2022 and 26. And European transformation projects across decarbonization, energy transition, digitization, and technology infrastructure are key drivers for this growth. And another strong driver of growth is the trend for market democratization. Globally, this represents a 2.8 trillion opportunity, creating high demand for wealth solutions, an untapped pool of capital. Besides the sheer availability of capital, the asset management industry is well equipped to provide solutions for long-term and customized capital demand. The list of transformational areas is long. Let's take the real estate sector, which is one of the largest emitters of carbon in the European Union. Here, we can create an impact both in the commercial and the residential area. In the infrastructure space, we see a vast number of projects related to power plants, power grids, digitization, transport, water infrastructure, just to name a few. Here, impact can be significant to drive both Europe's green transition and the digital transformation. And not to forget, Europe is a large consumer of indirectly generates emissions in emerging markets. Capital is required to form partnerships and ensure sustainability throughout the supply chain. We at DWS have already put quite some efforts into addressing capital demand from just mentioned areas. Last year, we positioned the European transformation as one of the key strategic priorities for 2023 and beyond. We aim to raise up to 20 billion by 2027 and are committed to addressing the growing demand for research and products that are transformative in nature. Let me share some practical insights. First, well-informed decisions are key for our joint transformational efforts. We have established a European University Partnership program to create a forum for just this. This program is thought to be a hub for academic partnerships and is open to all interested stakeholders. As a first step, we formed a partnership with the Frankfurt School of Finance and Management and are committed to financing the efforts of the academic center accordingly. To further drive thought leadership, we have deepened our in-house research in key transformation areas. Our first piece, a framework for European transformation, is available and will shortly be followed by papers addressing topics such as transportation, direct lending, energy efficiency. I encourage you to stay tuned. These papers will all be made available. Second, asset management products will serve to channel investments in the real economy for decades. We need to ensure we have the right solutions to match the complex and diverse capital requirements we see. Let me give an example that demonstrates greatly how regulation can enable transformation. The German Fund Jurisdiction Act, which came into force in August 21, addresses the trend of private market retailization. This new regulation builds the basis for products that allow German retail clients to participate in infrastructure projects in Europe. At DWS, we welcomed this opportunity and recently launched our German DWS Infrastructure Europe Fund. Going forward, we will target the development of a more specialized offering. We intend to make use of a broad range of financing products, from equity investment, blended finance, to mezzanine financing over venture capital. Transformation is, if you think about the past, remarkably close to Europe's core. To keep a high level of sustainable prosperity, it must once again transform itself. For this, capital will be highly critical. Or said differently, it is the role of the financial industry to enable and facilitate that Europe is successful in transforming itself yet again. Listening to previous speakers and panelists, I noticed we are not lacking a sense of urgency when it comes to transformation. However, it stands to reason that the world is moving not fast enough. So let's change this together. For this, I want to conclude with 3 key factors that will help us transforming Europe. First, establishing thought leadership. We need to build a productive, forward-looking leadership narrative that focuses on long-term trends that go beyond cyclical developments. This enables informed decision-making. Second, deepen the dialogue with policymakers. Only through honest conversations about what capital markets need, Europe can ensure regulation enables transformation. And third, offering suitable products. Companies and projects requiring capital are diverse. We need to address different financing needs with the right solutions. And at that, keep in mind what investors want. There are great investment opportunities arising from capital demands in Europe. It is our task to identify growth potentials and develop the right products for our clients to participate in that growth. Let me circle back to the beginning. We, the financial industry, have a critical job to do when it comes to the future and the transformation of Europe. Therefore, I invite you all to join the efforts in revamping the European economy to make Europe fit for the future. Thank you.